Markets. Francisco, great to have you with us. Just tell me your first take on the delayed IPO.
Well, look, I think the main issue that we're looking at here is as you were commenting before, it's an issue of what is the most efficient way to fund a country at a time when emerging market equities are not particularly highly valued, and at the time when, frankly, the energy sector has recovered from the lows, but it's still not the most attractive sector in the equity markets. So there's that issue, and I think from an energy market perspective, we've seen a recovery in prices. I think back in June, the Saudis and the Russians were feeling pretty good about where we were in terms of the price recovery that they engineered a year and a half ago with the production cuts, and I guess they've probably realized that even at $75 a barrel, debt is an attractive option, and that's really, I think, what it looks like from the outside. I'm not sure it has a huge impact directly on the oil market. At any rate, I don't think that Aramco, it wasn't within the Aramco's plans to lose control of the supply side, or the government's had any intention to lose control of Aramco's production patterns. So in that sense, I don't think it changes the too much the expectation. But what's going to be very interesting going forward is we're going to learn a lot more about the way that the world's largest oil company deploys its cash and invests and what have you, and we'll probably have a lot more sense as to what the reserve outlook is for Saudi, which for now remains a little bit of a secret to many of us.
Francisco, can we just talk about the strength of Saudi Arabia and the balance sheet of the state right now? This seems like a really elegant financial engineering to save face. They're going to borrow money in the debt market. Saudi Aramco essentially is going to be used as a funding vehicle for the state. They're then going to funnel that money when they borrow it into SABIC, which essentially is majority owned. A big share is owned by the state, and the money goes back to the state. Is that essentially what is happening here, Francisco? The money's just going from one company and then all the way around and back to the state?
Well, as we talked about earlier, I mean, when you need to fund a plan to complete the Saudi 2030 vision, and Saudi Arabia, despite the recovery in oil prices, still needs money to keep funding the government budget deficit, because according to the IMF, the budget deficit is still not covered until oil gets to $85, $87 a barrel. You do need alternative ways to fund it, and this one, I mean, I think it's as good as any in the sense that the U.S. 10-year rate hasn't really gone up dramatically. If you look at rates, we're actually seeing a retracement in the cost of issuing debt. Saudi Arabia has a very strong balance sheet, so as a result, it doesn't face any of the pressures that other emerging markets could be facing right now, and we've seen in Turkey or in other economies. So I think it's I think it's, like, to your point, it's elegant, and importantly, it doesn't necessarily affect the oil market all that much. I mean, it's the only thing I would say is that it's a fair amount of debt. Remember that debt market issuance in the emerging world is about $150 billion a year. So this would take up about half of what gets issued on the average year in the emerging market. So you may have to do several tranches, but in general, I mean, it's an elegant solution. And again, quasi-sovereign debt in a case of a country like Saudi Arabia is quasi-sovereign truly. I mean, it's almost sovereign debt, and unlike other countries where this issue gets a little bit more attention, right? I mean, the difference between Aramco and the state is effectively very, 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 very small.